Hi, everyone, and welcome to the Block Solid podcast with Yael Tamar, where we talk about real estate transformation with technology. Make sure you subscribe so you can catch every episode.
Hello, and welcome to the Block Solid podcast, where we talk about the evolution of the property market and the blockchain, the newest technologies that enhance and revolutionize the world of real estate as we know it, and how we, the owners, the buyers, the renters, the investors, and the entrepreneurs can benefit from it all. I'm Yael Tamar, CMO and co-founder of Solid Block, pioneer in real estate tokenization. And today I'd like to welcome a very special guest and a good friend, Gal Landau. Hi, Gal.
Hi, Yael. Thank you for having me.
Absolutely. Thank you for coming on my podcast. So a few words about Gal. Gal is an accomplished senior executive and has been in the financial industry well over 15 years. Now, Gal was selected as one of the top 100 women in Fintech globally. She formerly served as the CEO of the Tel-Aviv Stock Exchange. Before joining the exchange, she held various high positions at one of the Israeli's largest banking groups. Now, early career positions include senior economist at the Banking Supervision Department and the Central Bank of Israel. Now, Gal is the head of research and member of the academic committee at the Blockchain Research Institute at Tel Aviv University and a senior fellow at Cyber Center in Haifa University. So, Gal, again, thanks for coming on. I'd love to hear how, you have this rich background in banking and exchange, like a super highly regulated world. Now, how were you first introduced to the world of blockchain?
Well, actually, it was long ago. Well, during the crisis of 2008, I was the chief risk officer of one of the biggest banks in Israel, as you said, the First International Bank of Israel. And I think that after the post-crisis in 2011, when we actually felt the crisis at Europe, the landing crisis at the real estate, which is area that you feel familiar, I think that someone dragged me to hear Andrea speaking about Bitcoin, and you won't believe I actually fell in love. So in 2011, which was actually very, very, very early stage, I started to learn about Bitcoin. It was very early. I was not convinced. A couple of years later, I got to the Tel-Aviv Stock Exchange, and across the street, it's the Bitcoin embassy. So a couple of days, I just got across the street, started to hear lecture, and it was not started with blockchain, which is everybody knows it's the technology that underbits Bitcoin. It was started to get in love with Bitcoin. In 2016, I brought Nasdaq to the Tel Aviv Stock Exchange. We started to get familiar with blockchain use cases. Very, very good use case, like using blockchain for settlement and clearing. And this is where I started to really check what we can do with blockchain. We started to work with them. And I think that it was even before the greatest late masters and started to bring blockchain to the Australian Stock Exchange. They actually finishing their trial to replace all their post-trading systems with blockchain to shorter their settlement time. So I think that I started to really check use cases with blockchain to try to make better intraday trading, settlement, and post-trading use cases with blockchain early in 2016. And after I left the Tel Aviv Stock Exchange early in 2017, I think it was the most obvious thing to me to go to Fintech, but especially to start to learn heavily and to jump to academia and to see what emerging technologies can do for us, especially to improve trading, post-trading, pre-trading, to reduce transaction costs.
That's very cool because, it's very ironic that the Bitcoin embassy indeed is right in front of the Tel-Aviv Stock Exchange. This is exchange is a traditional way of people transacting, right? And exchanging assets. And here you have the Bitcoin, which is the new way, right? Be your own bank, be your own exchange, just trade with people. So, it's very ironic how you kind of cross the street, why did Gal cross the street?
Very symbolic, very, very, very symbolic. And it's not that Tel Aviv is small and Bitcoin and traditional finance are not oil and water at all. I saw that early 2016, Wall Street needed at least 3 years more, and we will have time to discuss it all.
I know, right? Because we didn't have you there. All right, so very cool. So you touched upon different interesting use cases that you see for blockchain, decentralized finance and exchanges and banking. Now, I want to talk a little bit about the demographic and, up until probably last year or maybe 2019, all the Bitcoin and crypto users, or most of them, were these male, young, tech-savvy individuals. Actually, a lot of them got into it through mining. So, people made a lot of money. Now have 20-something billionaires around the world, especially as Bitcoin's going up. However, what I've seen in recent news is, and also a lot of people are saying that's why Bitcoin has shot up so much in the recent months, is that institutions are coming in and they're considering it now as a viable asset and maybe even a must-have in a portfolio. So I want to ask you about this trend and where you see it going in the future.
About Bitcoin, about digital assets, about stock exchange.
Yeah, institutionals that come into the space.
Well, I think that we saw institutional jump in the digital area already, I think 2 years ago. They were tapping their fingers in the water. We are still lacking of one of the most important building blocks, which is a solid and stable custody solution. Well, I actually saw that at the Congress, they tried to push Jay Clayton to do something before is getting out of the SEC. So I hope that we are going to solve this main building blocks. And I spoke about it a couple of times ago. And the custody is just one issue, which is very important when we speak about institutional and sophisticated investors, because they are very straightforward to trade and to deal with what they are familiar across all the security value chain. They are going to do exactly with what they are familiar in the traditional stock exchange. So if you remember, when we start to deal with Bitcoin, the trading was not like they are familiar. We trade with what we have. And then we tried to do netting and compression. They are not suckers, forgive me. They are not going to trade. So we brought the traditional mechanism of netting and compression. So where we bring our money, it's going to be very efficient. That's what happened with the post-trading mechanism. The second phase that happened, which is still happening, is bringing trading mechanism. And I think that NASDAQ already sold more than 100 stock exchange, crypto stock exchange around the world. London Stock Exchange is trading matching engine. Nothing is going to be unless is going to be as they are used to. And this is actually why the ecosystem is going to be ruled by the traditional stock exchange. I'm not sure that I'm happy with it. We see that 6 digital assets is actually pushing. Just last week, they bought a digital custody stock exchange, Syngem, which was actually built by the Deutsche Börse. Well, they are building integrated stock exchange. They are going to be very efficient. They are going to look alike what we are see at the traditional stock exchange. So sophisticated investors are going to come and to see what they are used to. I think that when everything started, we hope to see new faces, new entrepreneur. We hope to see new fintech companies. What happened by the end of the day, that the digital assets arena, the crypto arena is going to be ruled by the traditional stock exchange. The London Stock Exchange have invested in Nervua. The Deutsche Börse is also building sort of a digital stock exchange, an integrated stock exchange that is actually covering, again, all the security value chain. As much as I recall, she even asked for licensing for banking services. So she's even going to cover custody and banking services in Switzerland. And as I said, 6 stock exchanges bought custody. I hoped, as I said, to see new faces. We have INEX, which was built by an Israeli entrepreneur. She filed F1 to the SEC. We have some solution, not integrated stock exchange. The future is going to be owned by integrated stock exchange, one-stop shop. They are going to be the most efficient stock exchange because by this way, they are going to lower their transaction cost. And the most important thing, this is the only way to build market depth and liquidity. This is probably the future. The winners take it all. The biggest one is going to take it all.
And thank you for this comprehensive answer. And I love all the examples you gave of acquisitions and the exchanges. I mean, you're really swimming in this space. I just have one question. When you said integrated stock exchange, what do you mean by that?
I mean that this is a stock exchange that covers all the security value chain. When we speak about the value chain, it means that we have the trading platform when you do your IPO at the traditional market and your tokenization at the new market. You have the post-trading solution, which is settlement, clearing, and again, you have the custody. And as I said, the new financial market infrastructure, the digital one, try even to broaden the solution. They try to offer even banking services. And at the beginning, they even try to offer pre-marketing solution. As much as you broaden your solution, you catch more clientele. And because this is an unregulated market, you don't have a problem to broaden your services.
Absolutely.
So, well, and one more sentence, it also happened at the crypto market. If you look at Coinbase that try to IPO itself, or at Binance, it happens also there. They are actually a mini banking organization. You can do IPO, you get all the necessary services. You can get a banking, you can get a wallet services, a security services, and also a banking services. You are actually getting all the chain, I mean, even an integrated chain here and here. And my personal perspective about it at the digital arena, at the crypto arena, is that I'm not sure that I'm happy. It's happening because most of it's an unregulated market. You might have a regulation on sort of an island. You have a tax regulation, AML regulation. You might have a regulation around the tokenization itself, the security regulation, but you don't have a harmonic regulation, not on a global wide. I'm not sure that by the end of the day, when you look at the fees, at the overall fees that the client pay, the client that want to tokenize his assets, or the client that buy the token, I'm not sure that the dream that we dreamt about, that we can reduce the numbers of the intermediaries, or that we can lower our costs, it's actually happening.
I agree with you 100%. And you touched on so many points I actually kind of wanted to talk about. So you touched on INX, which is one of my, favorite players, and I'm rooting for them. And we recently partnered with them to list our securities there. You touched upon Coinbase IPO, which was announced 2 days ago. The last valuation of Coinbase was 8 billion. And, for a relatively small crypto market, market cap for crypto or Bitcoin is not that massive, but the high valuation of Coinbase to me shows that there's a much bigger game here. And the game is securities that touch upon various asset classes out there. In real estate, for example, only in real estate, you have $300 trillion worth of assets in the world, which is much, much bigger than, Bitcoin market cap or all of crypto market cap, right? So, but at the same time, I am concerned, or maybe a little bit confused why they haven't jumped on the securities game yet. Any ideas why they're not selling securities? They do have all the licenses, it seems like, to do that.
Well, I think that what they're seeing and hoping for is what we are seeing that happening with Bitcoin. Bitcoin is becoming more and more a mainstream.
Yeah.
And besides what we see that happening with the price, which is irrelevant. I mean, of course, if we have a wallet, if we will put aside what happened with our wallet, I think that what happens with Bitcoin is that we are going to see that the supply and the demand is finally balancing. Just look what happened during the last week. When PayPal is getting in, we see that insurance company, traditional, regulated financial market, big financial market infrastructure is getting in. So when we are not going to see these huge trends in the price, and when we are going to see that, like, just when I think that it was Robinhood, or not Robinhood, when Google is going just add Bitcoin to the app, to their Cash app. So it's not just that Bitcoin got into mainstream. When the demand and the supply is finally going to get even, we are not going to see those jumps in the price. There, I hope that people are not going to see Bitcoin just as sort of an investment machine. They are going to try to use Bitcoin as a mean of payment. And that's why Coinbase is good with not diversifying their assets. Because there is going to be the huge boom. Look what is happening with central bank digital coin. Look what's happening with Libra or Diem. The real future is with decentralized payments. Mean everybody is fighting with the future of the global payment system.
Absolutely.
This is what interesting.
Absolutely.
And the one that is going to rule the decentralized payment system is the one that is going to be the banker of the world.
Right.
So I think that Coinbase is one of the beautiful conglomerate that was built.
Mm-hmm.
And I appreciate what they did even more with what other bigger stock exchange did. And I think that they are well familiar with the future of Bitcoin because they well see that when, again, the supply and the demand is going to be balanced, there is a huge, huge, huge chance that people is going to use it as a mean of payment.
Absolutely.
So
no, I mean, it's music
they
to
are
my
much more
ears.
smarter than me, but this is my humble understanding why they are stick with it.
Absolutely. Listen, this is music to my ears, everything you're talking, because, what we're doing in Solid Block is working on enabling people to be their own bank, to use the best payments, centralized payment systems available. At the same time, bringing this marketplace of KYC, AML solutions that kind of sew together a global KYC and AML. Right. So, kind of create a bridge between the traditional finance, because we still need regulation, towards this new way of payment, new way of ownership, new way of transactions. Now, you also mentioned DM, which is, the other side of the coin, pardon the pun. We talked about institutions and exchanges, and then there's Facebook, which is a client-facing application, which the government of the United States of America did not allow for Libra to actually be issued. And then now it's been rebranded as DM, and it seems that it's going to launch. It's very, under the wraps. See, I've been trying to look for code. I've been trying to look for information. It's supposed to launch. Not sure what it's going to be like. And I wanted to get your opinion on that. What do you think is going to happen? Do you think that, the regulation for this version of Libra coin is going to be more forthcoming? And what are we going to see from Facebook and DM in the near future?
Well, I think that what happened with DM was very interesting thing to watch, because what happened to be their main problem was not regulation. I mean, well, they actually killed them. And I'm not a fan of Mr. Mark Zuckerberg or Facebook, but I think that what happened to them was a very interesting reputation process to watch. We are living in a world where I think people become, because of COVID, because of Trumpism, because of all the fake news, I think that people might become very, very sensitive about branding and moral. And I think that they actually changed nothing, almost nothing about the core product. They didn't touch the wallet.
Mm-hmm.
Well, I mean, people that understand what Libra was all about, it was all about the wallet and the payment solution. This is the core of Libra. It was not the token, because, of course, they are very clever. What they wanted to do is to have a wallet and a mean of payment. they actually change almost nothing about the core solution. It was very important to them to rebrand themselves, because I think that what happened with the regulation that did the help to them was that people didn't believe them anymore. And this is very important thing to understand. They just needed to rebrand themselves. And it's not just me thinking. I saw some new survey that the OMFIF did when they just ask very depth survey, when they ask people, if you are going to use a global mean of payment, who you are going to prefer. I mean, like the four big tech giants or central banks. People said, I'm going to prefer central bank digital coin. And it was amazing because people don't like the big brother. People don't like central banks. I mean, we are using WhatsApp, Facebook, whatever, giving them their privacy. And it goes with other thing that happened during the last 10 years. Sometimes we get confused when we see that we are using less cash, but it's not true. We are using less cash as a mean of payment because we have all the cards or other emerging solution, but people are using much more cash as a mean of value. I mean, people are not trusting nor government, nor the banking. I mean, of course, it's because of the low inflation and the interest rate, but people want to have more and more cash in their house, in their under the bed. People have, and again, I'm of course finance and economist, but most of us are also look what happened in a sociological way. We must look what happened in our communities. People need to hold cash.
Yeah, there's a lot of uncertainty in the market and people are preparing for the worst. And also they see crashes in different aspects.
People want to have a bigger, I mean, it's not just, I want to say again, it's not just my feelings. We look at the banknote. Central banks are printing more and more bigger banknote because people want to keep and they use cash as a store of value. There's a big increase. People keep cash. We see
people get out of the stock market.
People want to have cash as a store of value. They use it less and less as a mean of payment. And all this goes again in a harmonic way. I hope that I current. This is the Trumpism. This is what happened in Russia. This is what happened in other non-OECD democratic countries. People want to have more cash. People start to believe again in central banks because they are believe less with the big tech giants, because the regulation, especially at the US, the Congress, and more in what happened in the regulation in Europe, do what they need to do. And it all goes back again. If I am happy that the power is moving from the big tech to the central banks, I'm not sure. Because we are not seeing that things are moving. We just see that the power is moving from one group to other.
This is incredible. I mean, people don't trust they say they don't trust the banks, but apparently they don't trust the tech companies even more, right? They feel that they're being, watched. They feel their information is being used. They feel they don't have privacy, and they don't realize that the big brother and the banks and the government is doing the same thing, but just not openly, right? So they're not supposed to. They don't have to disclose that they're watching you, right? Where Facebook and Google and others, that's their business model.
To close and to answer in pragmatic way to your questions, when it gets back to Libra or Diem, I'm well familiar with Christian Catalani, which is a famous economist, a brilliant one, is the chief economist. He was publishing the first paper, One Simple Economist of the Blockchain. Is a good friend. All that Facebook did is just to rebrand her solution. I wish them luck. I'm not sure who we want to be the banker of the world. I guess that they are going to get because they need, but they just rebrand themselves.
Awesome. So you touched on CBDCs. Can you tell us a little bit what they are, and are they really going to be a threat to crypto or other assets? We touched on the corporate type of Facebook issued assets, but what about the rest of them?
Well, central bank digital coins there are something new with them, and there are something that is not new with them. We have actually two kinds of them. We have the commercial central bank digital coin, which is not new at all. Central banks have commercial digital coins with the banks. They have online lines, SWIFT, and so on. So this is nothing new at all. What is new is to have central bank digital coins with us, the citizens. And it's not just doing digitalizations of the country coins or cash, it's actually more alike a faster payment system. This is more alike, only that is backed by the central bank. And there is many kinds of central bank digital coin. There is not just one model. It can be anonymous like cash, and it can be quasi pseudo anonymous like the Chinese bank decide. Many versus you can just do KYC when you get into the coin, and later no one's collect, or they promise that they don't collect information about you. It can be like cash, no interest, and you can model the coin that it pays interest to you. So when the central bank is paying interest on his coin, it's actually an instrument that compete with all the commercial banks. So you can use it as an instrument to work into your monetary policy, but in the other hand, you are actually compete with the commercial bank. Everybody thinks that central bank digital coin must be blockchain based or DLT based, but it doesn't have to be. It can be you can actually do it on spreadsheet, on Excel sheet. I mean, it can be done on a token based, it can be what we call balance sheet based. So you have many ways to do this central bank digital coins. Central banks do, during the last 3 years, lots of discussion. What is the right way to do? How it all begins? It all begins because central banks don't want to lose their grasp on their currency. It starts when in Sweden, which is a very special country, people stop to lose cash. It's until today, their numbers are amazing. I mean, their cash level began to be so low, and it was just because the population preferred. I mean, it was not pushed by the credit cards company like at the US or Europe. And the country and the central banks and the government understand that they are actually losing losing grab on the cash. So they said people prefer digital solution, even decentralized payment means. Let's just go and digitize our currency. And as I said, it's not just a digitized cash, it's actually a mean of payment.
Yeah.
And it's a very safe mean of payment because when I give you a token, it means that I open for you an account in the central bank. The solution was very interesting to a lot of non-OECD countries because if I open for you an account in non-OECD countries, there is a huge population which are non-bankable, and it's a very good for them. The central bank is open for them an account. It's an inclusive solution for them. And usually a non-OECD banks don't have a faster payment system. So you can see in South Africa, a lots of South American countries are developing a central bank digital coins. I think it's a very good solution for them. But in Israel, for example, when we try to develop a faster payment system, I'm not sure that we need central bank digital coin because those are a duplicate.
Yeah.
What's happening today when everyone want to have central bank digital coin? I'm not sure that they understand why they have it. A lot of global banks try to collaborate with each other and to build a net of a global central bank payment system. We can speak a lot about the benefit, of course. If it's not anonymity, you can use it to fight AML problems and of course tax problems. I'm not sure that you need to have it to fight with it. Inclusion, we already said, for non-bankable. Something very interesting, you can use it offline. You don't have to have the internet for that. You need to think twice why you have it. I'm not sure that it's very natural for a central bank to become a banker, to open an account for all the society. Very much prawns, very much. So every country needs to think very hard if she needs to rush to this solution, if she already have a faster, stable payment solution. Why?
I think
We
the
are not
citizens
going,
also
in
should
last
think.
sentence, we are not going to get rid of cash. Look what happened to China. She rushed to it. She pushed to it. She wants the information. And suddenly she find out that people need the cash at the fish market. Suddenly people even 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 and that is a country that everyone have at least one iPhone, and they have lots of application even for people that cannot read. Withdrawals, a lot of people still need cash. Very weak population at the fish market, older people, and they suddenly understand that we still need cash. So, good solution, not to rush to it.
Absolutely. I think we need to examine the economic implications also of the central bank providing the currency. And, the central banks traditionally influence the value, of currencies through different tools, monetary policy, fiscal policy, but they do it indirectly through the banks, right? By altering the interbank lending rate. However, when if the banks don't have the power anymore, if people don't come to the banks and people go to Libra or to Facebook or to Bitcoin, if people can now finance acquisition of real estate through P2P loans or fractional ownership optimization, how is the government going to control, the value of the currency in society? So we also have to think twice as consumers. We may trust the banks, but hello, at the end of the day, is that going to be better for us? What is going to be the rate of inflation for that currency and so on? How do they determine supply and demand? So, in my mind, for me, being my own bank would be the solution to, I think many people are thinking this way, especially millennials and young. Why can I have, this wallet that's independent? It's never going to be independent. There will be some IT company behind it because I cannot code my own wallet, unfortunately. But, I think that just like 100 years ago, people didn't know how to read and write, and they learned. Now people don't know how to store their wallet key or how to understand like which wallet to choose. They have the bank, they have God and the central bank and the state, but they're learning. 20 years from now, I think it's going to be, basic, just like read and write, right? So I wanted to ask you about the stock exchanges. And if you think the stock exchanges open up to digital assets, it's going to happen soon. And how are they going to do it? I know a lot of them are buying up companies that tokenize, issue assets, sell assets. How are they gearing up towards this new reality?
Well, we already discussed that I think most of the traditional stock exchange already did some trials with digital assets.
Yeah.
And I think that it's going to happen sooner than I thought. I mentioned a couple of the biggest stock exchange, London Stock Exchange, Six Group, Deutsche Börse, but I'm familiar with a smaller stock exchange, Turkish Stock Exchange, the Greece Stock Exchange, all of them. All of the stock exchange, even National Stock Exchange, are investigating digital assets, investigating blockchain, or investigating some local solution for lending securities, the options for blockchain to intraday solution or settlement solution. But I think that the main problem is regulation. Regulation, not just at the nationwide, but a global regulation. And this is what we lack, the G7 and the IMF, yet to say what happened with global regulation. The problem is not just trading. We need to remember that all the stock exchange have problem with post-trading regulation. Since the crisis, we have a very, very rush post-trading regulation. The clearing member have regulation when it comes to Basel, and unless we have a very clear regulation about clearing houses, how you settle and clear digital assets, what is the price in Basel for clearing member when they trade a digital assets, we won't see the traditional stock exchange trade and clear digital assets. I can tell that sophisticated investors are going to be very interested in digital assets. And this is the rule of the market. When you bring interesting assets, the market is going to take it. And we have, you know it better than I do, we have lots of rare assets, lots of rare assets that we cannot trade with them. But the security value chain is not add a trading. We have the post-trading. And the problem is with a very coherent regulation about post-trading, the problem are not the stock exchange. The problem is the members, the stock exchange members, and the members of the biggest clearing houses. Well, they are not problem. They need solution.
Yeah.
The members of the stock exchange and the members of the biggest clearing houses and the biggest custody members, most of them are banking organization or even biggest insurance company.
Yeah.
All of them are under Basel regulation or solvency regulation, and they need solution. They need to allocate capital to their risks. So unless, and there is a draft about clearing houses, capital allocation, unless we are going to have a clear regulation for clearing houses, this problem won't be solved.
Understood. Well, that's very interesting. Actually, I think Onera is operating in this clearing space for digital security globally between different banks, and I hope that they succeed. We're really rooting for them because that's going to build a global infrastructure that.
Now, as much as I recall, Onera is offering something sort of a self-regulation problem. Onera is offering sort of a standardization. This is something actually very upsetting because I think that the market during the last 5 to 7 years offered a lot of self-regulation processes. It did a lot of things that is helping the regulation to come with a common regulation standardization that came from the market in KYC standardization, in token standardization, help the regulation to understand the activity, to minimize risk. And Onera is as much as I recall, is offering sort of a token standardization, right?
Yeah.
It's not instead of regulation. And post-trading regulation is a very, very, very complicated and necessary.
Yeah, absolutely. Well, just to conclude this super interesting talk, I think we learned a lot today about CBDCs and Libra/DM coin and how exchanges are playing their part, different challenges there. I mean, we're having a very challenging year, but also very interesting year. That pushed us into digital transformation, into digital assets. Helped Bitcoin grow from $5,000 or $6,000 to 23. And what I would like to do right now is kind of paint this picture of 2030, right? We're 2020, end of 2020. Hopefully in January we'll see what happens to DM. But I want to jump 10 years, right? Next decade. And we talked about how you're going to use some sort of a digital wallet, possibly in 2030 to buy, maybe, I don't know how you're going to buy fish in the market. I don't even know if fish is going to exist, but how are you going to buy things in the market? How are you going to buy real estate? How are you going to buy stocks and bonds? Are they going to come in a digital asset form? Can you paint a picture of your vision of the future, Gal, in 2030?
Well, I'm very not good with guessing, but what I know about intermediary and how we buy is that something is always left behind, and it's good. When we leave the financial market aside and when we look at Amazon, which is one of the best example of good intermediation, the good things that happen for us, that we still have bookstores. And this is what happened. Intermediation is something fascinating. And this is also a major part of my research.
Tell me more about your research. Yeah, I'd love to hear a little bit more in a few words.
And I think that technology is doing good and bad thing for intermediation. Look what happened to Spotify and to the music sectors. We have beautiful things like Spotify, but we have very bad things when it comes to protecting people IPs. So we need to look. So when we get back to Amazon and to intermediation, something good happens when we go very fast ahead, but think something is also left behind. We still have bookstores, and we still have people that stand in the corner of the street and selling something. So we cannot stop technologies, and we cannot stop digital transformation. The good things with COVID, I think that it's going to push some areas that were left behind. I hope that we are going to use emerging technologies like blockchain with IoT and with AI to push things like in the area of supply chain, to do it good things, not just in bigger project like IBM pushed, but today we can do it like in smart food, to deal with hunger, to deal with urban gardening, and to do a lot of things that were very necessary. Well, in 10 years, we are probably are going to do a lot of things digitally, but a lot of things is going to be left as they are today to remind us, and
Interesting.
that's for good.
It's kind of like old school, you know. When I go to pay today with a credit card, and they expect me to, you know, just touch it, right? And I have to tell them I'm not home enough to receive mail to get a new credit card, so I still have to insert it and put the code, and they're laughing at me, right? But you're gonna have old school shops where you go in and you try clothes, and you're like, wow, this is an experience, you know. But you know, I'm also not very good at predicting. But you know, as an entrepreneur, we kind of have to work on products that will be relevant in 3, 5, 7 years, and not to the market that it is today. Is there today? So we kind of have to predict what is the market going to look like in 5, 7, 10 years, right? And then build solutions for that one. And that's why we're talking to visionary, you know, professionals and entrepreneurs like you, Gal, because in this 1 hour that we're about to conclude, you know, we've learned so much, and I got so many little pearls of wisdom that I can't wait to send this podcast to all of my team and say, here's what I was talking about, but she put it so much better than I could. So I appreciate it. Do you have any final words, suggestions, and you know, visions for today, for the future?
No, just to thank you for having me and wish us all good health. Thank you.
Thank you so much, Gal. So thanks for joining me on the Block Solid podcast. It was great having you on. You can find us on Spotify, Apple Podcasts, or by visiting our website at solidblog.co/podcast. If you enjoyed the show, don't forget to rate, interview, and spread the word. Thanks for listening, and see you next time. Bye.